Good morning for Wednesday, May 7th. This is Todd Mitchell for today's free video. I've been out of the office for the last 7 days, so I'm trying to get reacquainted with what's been going on with the markets, running some scans to see what's going on and see what trades are setting up. But before I dig into a couple of trades here, let me just talk real briefly about the AGN, the Allergan Inc. AGN trade that we had before I left. If you recall, we went long right in here. It was a beautiful setup back down into the gray action zone. Took partial profits here and then rode the remainder up where we got stopped out right in here with the trailing stop. So that was a $43.30. 43 and almost 43.5 points on the stock to the upside. So now it's coming down a little. So I'm going to keep this on the radar because I'm going to look for this low to potentially act as some support. If we break down through it, I would expect it to move down a little, further down into the blue action zone. And then what we'll do is we'll measure our fibs from low to high, and we'll look for an area in which to repurchase this to go long. All right. So we'll keep this in our watch list. Craig Hill filled in for the premium videos, the 1K a day premium videos that I do each day, and he caught a real nice trade here in Wynn Resorts, right? WYNN. The short was right up in here, about 214 and change, and we're still short. First profit targets hit down in here, so good job, Craig, for calling that one out. So people are profiting from this trade. It was a textbook trade setup, right? The trend changed from up to down, technically right in here, pulled back into logical resistance, created that key inside pattern. Again, that's just one of the patterns that we show here in the free videos. There's a lot more trade setups that we teach and give out, but this is one of the trades that Craig pointed out, and that was good for you. One trade that's setting up here is UTX, United Technologies. Again, this fits in the mold of a lot of things that I cover each day, right? It's a repeatable pattern that you see me talk about day in, day out. Right, the market's down into the blue action zone, approaching this gray action zone, and simply put, the market created an inside pattern yesterday, okay? And we're looking for the market to penetrate up through that high, which would get us long, with an initial catastrophic stop right down in here. So when you're looking to put on a trade, you always need to look at what your risk is, what your initial catastrophic risk is, and what is your minimum profit target. That minimum profit target needs to be at least 1 to 2 times what you're risking, preferably at least 2 times. Okay, but with the trade management we employ in the whole 9 yards, within the first day or two of a trade, we're able to move our stop, so we're risking anywhere from half to 2/3 of what the initial risk was. So on this particular trade, we're looking to go long 20 cents above yesterday's high. Yesterday's high is 116.62, so that would mean 116.82, right? Well, look at this. The market went up to 116.79. That's why I like to use a 20-cent penetration through highs or lows, right? And not just 10. So a stock over $100, I like to use a 20-cent penetration. Stocks under $100, under 100, I like to use a 10-cent penetration through the prior day's high or low, right? So look at, if I used 10 cents above yesterday's high, I'd be long right now, and I'd be losing money. So the market missed my entry by 3 cents here, okay? Initial catastrophic stop on this, if I had been filled, would be below yesterday's low. Why? Because if the market reverses intraday the same day of entry, right, after taking out the high, I'd be long. Well, if it took out the low, that'd create an outside pattern, an outside bar, an engulfing pattern, and that wouldn't be good. So I would want to stop myself out. My first profit target would be up in here, which is about 2 times what the initial risk is. Okay, so far, market has not penetrated us here at all. Let's take a look at crude oil real quick, too. I know I'm boiling the ocean here. So if you take a look at crude oil has pulled down, right? Crude oil has pulled down. We did make a new high. Remember this trade over here is a beautiful trade. did exactly what we thought it would do. It retested the high, took it out marginally, really got created that inside pattern, and then came down. Remember, as the market was dropping, I was talking about looking to get ready to possibly buy it again. So the market came down into that gray action zone. Look at, we created pretty much a neutral engulfing pattern followed by a slight inside pattern from yesterday. Let's see, the high was 142. So it was barely an inside pattern right there, right? Closing on the low of the day, and then today we barely took out those highs. So my thought is, I think this area here, you could look to buy it with the stop right down in here or slightly below the 200 exponential, all right? So today on the premium video, we're going to talk about other trades that are setting up real nice with some trade management on current trades. All right, have a profitable day. Bye.